that particular deal, it had asset financing, it had invoice financing, it had seller financing. But you have to decide on what's a proper red flag that it's like a red stop sign rather than a red flag. If I can do that, you can have a conversation with the business owner.
I must say, and that's a beautiful answer there.
That was a few clips from my session with someone who contacted me on YouTube to ask me questions about their journey to help them along to buy a business. And if you would like to do the same, click the link below, complete your details, and I will contact you so we can have a similar Zoom call session to help you answer any questions that you have about your journey to become a business owner. In this case, the person concerned wanted their face to be blurred, which I have done. So let's get on with it and let's see what questions and the answers this person got from this free session. All right, well, it's nice to meet you, Victor, and I'm here to hopefully answer some questions. I guess you are, from the very fact that we are speaking, you're looking to buy a business, invest in a business.
Yes, that is absolutely correct. I started on this journey late last year in December. I toyed with the idea a long time ago, but I quite didn't have any information. And I almost, I think I lost sight of it, And then last year I started taking closer attention. There is someone that was offering a course, but it was supposed to be free, but it was a precursor to the main thing, which was a few tens of thousands of pounds to come onto it. And I thought to myself, if I had that kind of money, I might as well spend it buying the business.
Right.
As against, going on a course, which when I spoke to quite a few people who were on it, they felt, they weren't quite getting the value commensurate to the amount they paid. So that didn't encourage me.
Oh, what, with the people that went and paid the 10 or so grand, they didn't get the value.
That's
I
right.
won't, well, I don't know if it's right or wrong to actually ask you the name of that company. Is it?
Uh,
You don't have to tell me.
I don't want to. He's quite big on the marketing and.
No, that's fair enough. I have a feeling I know who it is, but we'll leave it at that.
I didn't quite feel encouraged, but that said, I did get a lot of value from his free material.
You did? Okay, well, that's good.
It gave me the confidence to be able to go forward.
Okay.
Gave me the confidence to be able to go forward. And since then, I really ramped up my outreach to business owners in February. What's this? This is we're in June. No, I ramped it up really about March, April.
This year, recently, yeah, 25, yeah,
25, 2020,
yeah.
And really started sending out letters close to probably about 1,000 a month. Okay.
Oh, wow.
Yeah, just reaching out locally within a 50-mile radius businesses.
8,000 a month, 50-mile radius.
1,000 a month.
Oh, sorry, 1,000. Sorry, I had 8. Yeah, I was going to say 8,000 seems like a lot. 8,000 a month.
No, just
okay. So you've been very busy. And how are you finding those? What sort of medium are you using? I presume you're paying for that service, are you?
Yes, I'm paying for the underlying data because I did try scrape getting data off company's house.
It's just too time consuming, isn't it? Yeah.
Time consuming. A lot of it seems to go to the accountant's desk.
Yeah.
A lot of the smaller businesses might just list the accountants on company's house. So
who did you pay and who did you go for out of interest?
it's a company called Market Location.
Okay, and it works well.
Works well, I must say, because I have had one or two businesses contact me and they say, "How did you manage to find us?" Because they were a partnership. One of the ones, the first face-to-face meeting I've had with business owners who own a specialist paint resale retailing business. They sell to commercials and they sell to
B2C and B2B. Yeah.
B2B. It's been going for more than 30 years, and they're
okay. That's a big tick in the box. Yeah.
They're looking to retire, and the first meeting, and they said, "Oh, we've never had anyone write us any letters. How did you find us?" And I said, "I've had to get the data from a company that knows how to find people like you, etc."
And what, just if you don't mind me asking, what sort of cost is that does that come to charge?
Probably come to about, so I've paid, so I'm allowed to download up to 5,000 records over a 1 year period, and I've paid about 2,500 approximately, inclusive of VAT for that
Okay,
privilege. Yeah.
fine.
So I found that I've been getting responses. I've had two face-to-face meetings so far. A few other businesses have not quite ticked the box that they are too small, or the owners didn't seem particularly keen.
What's when you say they're too small, out of interest, what's your criteria? Where's your threshold of small versus where you would go forward?
Um, Ideally, I'm looking for businesses between 1 and 5 million revenue.
Revenue. Yeah, I agree. That's what I promote. I think it's, once you get past the £1 million mark, it's kind of almost like a threshold that that business is properly established. And in your case, it's been going, the one you were just talking about, 30 years. But as you know, turnover, vanity, profit, sanity, cash flow is king. That's I mean, I always add that on the normal, whatever that motto, whatever it is.
Yeah,
But profit is important. Million turnover, ideally minimum 10%, 100 grand profit or more, ideally. So yeah, okay, that's good.
so that's what I've been looking at, and some businesses that do reach out that they don't meet that threshold, they are sub 1
Yeah,
million,
that's
300.
great. Yeah.
Right.
Cool. And are you agnostic about the type of business? Are you kind of thinking, I don't want to buy a widget manufacturer or whatever it is? You are quite broad in terms of your approach. Bit like I was. I didn't really mind what business I bought as long as it ticked the boxes, like it was at least £1 million turnover, it had £100,000 profit, it had employees to run the business for me rather than buying myself a job, and all those type of things. Is that your kind of what your approach is?
It's my approach has evolved. I started with trying to target particular sectors, and I'm
Okay.
not getting much responses. So I broadened my scope.
Okay.
And then I began to get some responses. And over time, I'm right now, so my scope is quite broad. I mean, there are particular sectors I'll be quite careful with. For example, pure retail. I'll be very careful with that.
Yeah, be careful with that one. Yeah.
Careful with that. But other than and more complex businesses, businesses that that require a bit more involvement, except if it's mature enough and has the right management team, etc.
Yeah. Yeah.
It's like maybe insurance and that have regulatory implications and all of those things. I don't know.
I mean, it's doable, but it would require a little bit more thinking about it. I mean, my background is I'm a chartered accountant, chartered tax advisor, so I could, if I wanted to buy another business, I could buy an accounting firm because I've got that background and experience. Just because I didn't have that, it wouldn't stop me from buying it, but it probably gives me an edge over someone that doesn't have it. Let's say, for example, you've been in the insurance sector, that will give you an edge and maybe be more confident about buying that type of business. So I think you're right to be cautious in what you're thinking. But you hit on something quite important there, and I don't know whether you've considered this in your approach. Probably have, is why you did this, is that if you decide, okay, well, I'm going to be buying let's say insurance business, for example, let's just use that as the example, and you're targeting just insurance businesses, you might have to be a bit more patient to find the right business, the right time, someone wants to sell it, and all the rest of it. It will take you more time because you've limited your scope. So by broadening your approach, you will hopefully speed up your process because you're going to be able to write to much more businesses. There's more opportunities because you've got a bigger pool to fish in effectively. So that's as long as you're happy with that approach, because the way I see it is a business is a business is a business within reason. It has customers, it has employees, the right business has employees, and it has systems and processes. I mean, that's just breaking it. putting it into the very simplistic terms. And if you buy a business already with paying customers, that's great. And this business has this type of customer, that business has that type of customer. Essentially, they are a customer. It has employees. And as long as those employees know what they're doing and you're buying the systems behind that, you step in and don't change anything straight away, well, maybe improve things, it should work. So I think you're approaching it the right way. So cool.
Um, when I contacted you was prior to my face-to-face meeting with the first business I was
Oh,
going to.
right. Okay. Was that nerve-wracking?
It was very nerve-wracking, I must confess. I was
I
thinking,
remember my first ones. What do I say? Where do I put? Yeah, no, but
yeah,
you've done it. It's great. You know,
it did go
and
well.
you didn't die, did you?
No, I didn't. If anything, I was, I was quite happy that at least I've been able to go past that.
Yeah,
Now,
well, you push yourself, you push that comfort zone. You've done it, and then the next one will be easier and then easier, and the more you do, that comfort zone becomes your comfort zone, if that makes sense. So great, yeah, carry on.
yeah. So I was beginning to reach out to say, what? It's always the question of what don't I know that I need to know.
That's right. Yeah,
It's stepping into a new terrain. It's always the case of you don't know what you don't know.
I was about to say that you don't know what you don't know. Yeah, absolutely. Yeah,
So that kept because and then I saw your videos and I watched a few of your videos. Oh, okay, I like what he's saying. But this is very down to earth. This is not very sales money and glitz and all that. I've seen quite a few. There are quite a few out there. So yeah, so I decided, okay. My question was really what kind of support, and I did go to look at your course. And the thing I liked about the course that you've put together, you have also added tools for analyzing balance sheets and the company books. I haven't seen any other programs out there that has.
I don't think there is anything else out there. To be fair, I think it is the only one. Yeah,
I haven't seen any, and
yeah.
even if I don't go for the course, I'll definitely be getting that because
Yeah, because you can buy it separately or it comes part of the course. Yeah. Yeah. And I know, and I'm not trying to sell you it, but I think, well, put it this way, I developed that, like in the other software I sell on Raven, I developed that in the trenches, if you like. So my cash flow forecaster, each time a client came to me and said, oh, we need a cash flow forecast, you start from scratch. I thought there's got to be a better way. So I developed that one. And then equally, as I was looking to buy a business, every time I wanted to analyze the numbers, but quickly, because when you start seeing a lot of businesses, you don't want to be sitting there and starting from scratch, what do these numbers mean and how do I put together the financing? And that's the bit I really love about it, because you'll get a feel about valuation and what multiples and all the rest of it. And that's kind of I mean, there was two elements, and this is what that particular thing does. To evaluation, there's the profits and working those out, which it will do, and the different add backs and so on from the accounts you put in from the business, and then there's a multiplier, and that's kind of it's very subjective, the multiplier. The profits, is it EBIT, EBITDA? I assume you understand what those are. I promote EBIT, well, adjusted EBIT actually. I'm not a keen fan of EBITDA. You may or may not have seen my video on that.
I did see that, yeah.
So the reasons behind that, because depreciation, albeit a non-cash flow adjusting item, it's effectively adding a cost, or it's a deduction on the profit and loss account, to effectively a cost of using that equipment, which at some point has got to be replaced. So if you strip that out, you're overstating your profits. And to be fair, where that really hit home for me, when I was looking to buy a business, I looked at a haulage company. Now, haulage companies, as you can well imagine, have got high capital costs. Vehicles, HGVs cost a huge amount of money. And if I stripped back the depreciation, the multiple and what that guy wanted for the business seemed too high. And I thought, what's wrong with this? Because you learn, everyone talks about EBITDA, and I think, well, this doesn't feel right. It just, there was a feeling. And I thought, well, it's the depreciation. Because if I buy this business with that amount of profit for that amount of money in 2 years, 3 years, whatever it is, I'm going to have to buy more of these
Yeah.
lorries. And where's that money going to come from? From profit. But if you've reduced the profit that you've paid for, if that makes sense.
Yeah, if you've increased the profit because you haven't deducted the depreciation, isn't it?
Yes, exactly.
And
So
it's inflated.
you've inflated the profits, so you've paid more for something, which then doesn't take account of the fact that you've got to do capital expenditures, whether it's a year, 2 years, or 5 years, or even 10 years' time. That's where it didn't make sense. Now, if you're talking about, let's take an insurance business that we've already touched on, and let's say they've got, furniture and fittings, and they've got computer equipment, and it's minimal compared to the profits, and you add that back, it's not going to have a huge impact on the business, but it's more capital intensive. So if you go back to a widget manufacturer, it'll have plant, it'll have equipment to make the widgets, and so on and so forth. If it's those type of businesses where it will have an impact on what you're paying for that business. So I think you just have to be a bit careful. But I know this has gone on a bit about when you mentioned about the tool, but it does all of that part for you. But equally, what I love about it is when I was looking at a business, think, right, how can I finance this? And where it really worked well, where I looked at all different types of financing, agreed the deal, didn't go ahead, but it was, in that particular deal, it had asset financing, it had invoice financing, it had seller financing, it had all these different things. And it helped me to say, right, okay, the purchase price is X. If on the balance sheet there's this amount of accounts receivable, I can get 75% of that, say, on asset finance, and so all of a sudden that reduces what I've got left to pay. And there's it was a civil engineering business, a lot of capital, diggers and all the things that dig up the roads and all that sort of malarkey. So I had asset finance, and it was all unencumbered, so there was no loans on it. So I did that, and it reduced it down. So then the balance, and then I said to the owner, and we built up this rapport. I said, would you pay agree to finance the balance on seller financing? He said, well, what's that? And I explained it to him, and he agreed to it. 5 years, 0%. It didn't go ahead because, believe it or not, this is why seller finance is so much quicker and better.
Yeah.
During the process of agreeing the invoice financing, bear in mind this is not my business at the time, agreeing the invoice financing, this will be, well, hopefully this is useful stuff for you anyway, I don't know. I know this is not the question you asked, but is this useful?
This is useful, yeah. This is good to know, yeah.
Brilliant. So this is a business I didn't own, but I agreed invoice financing on it. I agreed asset financing that I'd agreed before I owned the business, and then the balance to be seller finance. But in the process of agreeing that finance, which was with banks, it takes time, and I hadn't appreciated it was still on the market. You learn these things. Someone else came along, offered cash up front and an extra 100 grand for the business. I was gutted because this was a business that originally he wanted £800,000 for. I'd agreed £500,000 for, and it was all financed.
Self-financed, yeah.
It was such a deal. When it was, I mean, he was so nice about it. He rang me up. He said, "This is a phone call I don't want to make, Russell, because we'd built up such a good rapport." He said, "I have to look after myself. This guy's come along, offered me 100 grand." And I said, "Look, we've just done all of this, and I can't offer it up front because I don't have that amount of money, because it was, balance was seller financed." I said, "You've got to take it." And we walked away friends, but I was gutted, but it is what it is. And you learn. Had I not done it, I wouldn't have learned that lesson. And I can impart that lesson on other people. It's invaluable, isn't it? Those type of things. So yeah. So that's what that AccuCalc, the software does. Well, it's not software, it's a spreadsheet template, basically. So yeah, and if I was to look at buying another business, I would absolutely use it myself. So yeah. But anyway, so a bit of a long answer, but
That's very useful, very, because I was gonna, just on a tangent, I was gonna ask off the back of that. Given that experience, could you have asked that they business be taken off the market while you were negotiating and trying to get the finance in place?
Yes, you can ask. They can agree or not agree, but you could say to them, and my reply to someone, if they said no, I said, well, like, I'm not going to waste my time because I don't want to waste your time or my time sorting all this out. So, yeah. Where the problem lies, though, and I'll come on to the way around this, is this particular business was found through a broker. Okay. So, yes, it might have been taken off the market. However, because it's with a broker and a broker just wants to get a deal done, there is a possibility. I don't know. It depends on the reputation of the broker. Let's say he took it off the market and someone rang him up the following week and said, oh, I've been meaning to ring you about XYZ business. Now, he could say, well, actually, it is off the market, but let me speak to the owner. And the owner might say, well, yeah, I am interested. I know we said we'd take it off the market, but a deal is a deal, because there's nothing really, unless you get them tied into some sort of contract or what have you. But are you really going to start suing someone? I don't know. But so it does slightly open you up. But yes, I would agree. Get it taken off the market, get it agreed. And most people are genuine people. I think in this case, had I done that, he probably would have stayed with that, and the broker would have taken it on. This person wouldn't have found it because it took at least a month to 6 weeks to arrange all that finance. So by that time, anyone wouldn't have seen it on the internet. It was a mistake, my mistake. I hold my hands up. But the way I see effective way around that is by what you're doing. You're writing to the people. It's not on the market, so no one else is going to see it unless someone else writes to them. That problem goes away, doesn't it? So that's another benefit of writing to somebody rather than going through brokers. And I wouldn't discount brokers. Keep an eye out for things because you never know. But yeah, so.
Yeah, I am also occasionally, because going through the broker approach takes a lot of my time.
They're not easy. They put roadblocks in the way. I sometimes I used to think, crikey, are they really wanting to sell this business? It's almost like they didn't want to sell the business because they'd say, well, give me proof of funds. So I used to say to them, well, look, I don't know whether I'm going to be paying what you're saying that business is valued. So what are we proof of funds for? What you're saying it's valued at? Secondly, I don't even know how I'm going to finance it because I haven't seen the balance sheet. I haven't seen the numbers. I don't know what the valuation is. And I don't normally say to them, and I haven't spoken to the owner about seller financing. So I used to have these, arguments with brokers just to get through the door, to get the information to speak to the owner. And then they sometimes seem quite reluctant to let you speak to them, and NDAs and so on and so forth. Now, I understand why they're trying to protect their client, but what do they want to do? All the client wants to do is sell their business, make it easy. But I know you've got all these tire kickers, and I was a genuine person. You've got, and I used to get through it, but sometimes it was hard work, and you just proved that you were a genuine person that wanted to buy a business. So yeah.
Okay, so back to my contacting you. So when I also looked at the course. So I was looking, okay, either buy the calculator, which I think would be quite useful, because then again, I had already started thinking about how I would do a due diligence.
Yeah.
When I got to that point, should I speak to an accountant, etc., etc. So that was quite good to see. But I thought if I got the course, I don't know how much support is available through you on the course or as a result of buying that course, because I felt I was at a point where it's more than just the courses, because I consume loads of materials. There's loads of free content, so I make the most of it, So I was just really going out there and executing, pushing myself, getting into
which is great, yeah.
businesses and learn in doing, as against continuing to consume more and more information. That could just be a hiding place for procrastination. So anyways,
I like that. Yeah.
being honest with myself.
Well, no, you've got to be. Honesty is the best policy, right?
Yes.
Yeah. And well, in terms of support, The course itself comes with an online support. And in fact, I've just literally moved my whole site from what was a WordPress site to Shopify, which is so much better. It's faster, and moved the whole course and all the rest of it. And whereas before I had a Facebook support group, that's now moved to online as part of the actual website, which is far better because I don't like going on Facebook. And the trouble with Facebook, even with a Facebook support group, you've got all these distractions. To get onto it in the first place, you have to go on Facebook, and you've got all this stuff coming at you, and it's very easy to get distracted. And then before you know it, you've wasted half an hour going down a rabbit hole. So now it's just purely on there, and it's just questions and reply by answers. That's the support it comes with. I've debated for a while whether to offer like a follow-on mentorship, which would be an additional charge. At the moment, it doesn't offer that. So it is the course and questions and answers, and people have asked, I've this question or that question about this business, or what do I do here? That's really what it offers. So at the moment, there's no upsell, as they would say.
That's right, yeah. So is it a case of pre-answered questions bank, or is it questions that come in and you or someone responds to those questions?
Yeah, it's not a bank. Yeah, so it would be, let's say you had a question, I don't know, I'm looking at XYZ business, these are the numbers, this is what I think, do you think it's a good idea? Or I don't know, the seller has said this to me, how would I respond? Or it's those type of things. Or I'm considering this particular sector, have you thought of this? It's that type of thing. So put it this way, not that I had hundreds of questions, but I've not yet had a question I can't answer. So there's the challenge, Victor.
Yeah. So it's not. I think I was trying to separate it from. So it's live answers against a question and answer bank. You see what I mean?
Correct. It's live answers. Yes. So it's bespoke questions and bespoke answers. Correct. Yes.
Okay. That's what I was trying to tease.
Yeah. And actually, you also touched on something, and I'll come back to it because it might be worthwhile touching on it. You mentioned about due diligence. There are two options. Admittedly, I have an advantage because of my background. I did auditing, I'm an accountant and so on. So I have that skill set. Okay. But equally, it gives me the skill set to be able to teach it too. My course includes how to do due diligence. And again, I think I'm the only course that does that. Now, the two alternatives you have, okay, you get to the point where you have agreed what you're going to pay for the business, how you're going to finance it, you've agreed a heads of terms or whatever it is, and now you want to get into the nuts and bolts of it and do the due diligence. Option one is you then engage with a firm of accountants and a solicitor to do, certainly if there's property involved, and the share purchase agreement and all that sort of stuff, and they would do some due diligence around that. Option two is you do it yourself. Pros and cons of both, okay? Pros of getting an accountant firm to do it for you. Obviously, they know what they're doing, as long as you choose the right accounting firm, of course, because people make mistakes. That's the clear advantage of that. And it doesn't take up your time to do that. The downside of doing that is the cost of it. Now, nothing's free, of course, at the end of the day, and you want to pay for what you get effectively. Yeah. However, something that not everyone would necessarily think about, and this happened to me, take the scenario of the civil engineering business. Had I gone through the due diligence and then someone else came along and bought it, and I paid out or committed to 10 grand of accounting fees, because it's probably going to be in that region, depending on, it'll be obviously business size dependent, but we're talking about £1 million businesses here.
Yeah.
10, 20 grand with the accounting fees to find a decent accounting firm to do it. You do all well, the other option could be you spend the 20, let's say 10 grand, let's be reasonable, 10 grand, they go through all that due diligence and they flag something up. Now, that red flag or that flag could be, right, okay, I didn't realize about that, but I'm still interested. But it might adjust the purchase price. It could impact it. It could be the profits are overstated for some reason, or it could be something that you incorporate into the agreement going forward. So you still go ahead. However, I'll give you an example of a business that I did the due diligence on. I'd agreed what I was going to pay for it. I'd agreed seller financing on it, and I did the due diligence. And it turned out that although on the face of it they're making profits, they had major cash flow problems. They hadn't paid their PAYE for months on end. They hadn't paid VAT for several quarters. They had really bad cash flow problems, and that came out from the due diligence. And I think I'd agreed to pay 450 grand for this business, but I said, no, I'm not paying 450 grand for a business that is in cash flow difficulty. I'm not buying a liability. And admittedly, I turned around and said, I'll give you 50 grand for it. And they said, no way. Now, they may have said yes, but they said no. And the problem there is, had I engaged a firm of accountants to do that work, I've still got to pay that 10 grand out, and I'm starting from scratch again. So I've then got to find another business, go through all the whole thing, then get someone else to do diligence, another 10 grand. Now, you may be lucky and find a business that the due diligence is fine. You may pick up on things that you think, well, that's fine. It doesn't have to be perfect, but you have to decide on what's a proper red flag that it's like a red stop sign rather than a red flag. Yeah. Red flags in of themselves doesn't necessarily mean you don't buy that business. It just means, okay, I didn't know about that from the face of it, but what's the impact on the business going forward? What's the impact on the price I'm paying for that business? So that's the type of thing that you need to look at. So those are the kind of pros and cons. And the the pro, leading on from that, you're doing it yourself, you save the 10 grand and you could go through that multiple times without it costing you anything. The downside is it's certainly when you do it for the first time, you're kind of learning on the job, really. So I do teach you how to do it. It's not rocket science. It's just knowing what you're doing, and with the support behind the course, you could do the course and think, well, actually, this is straightforward, and then there'll be the questions. I've come across this, or this business has this on the balance sheet. How would you do the due diligence on that? That's where the support would come in as an example on that. And I can't think of an example, but there's all sorts of things that crop up. Think, oh crikey, I hadn't thought of that, but this is how I would approach that. So you would have to make an informed decision. It's a risk reward at the end of the day. And I can't tell you the business that you suddenly find that you get to the due diligence, whether it's going to be good or bad. No one can tell you. It's crystal ball gazing at that point in time. So, but I hope that helps with your thinking of that.
Yes, that absolutely helps, and thank you for clarifying, because that's what stopped me from buying the course, because I wanted to have that conversation.
Yeah, and the other thing to think about, you mentioned about procrastination. Something that you have to be careful of, and I know this because I was there when I was doing this, is that you have to be careful when you're doing the due diligence or having someone else do the due diligence, that you don't see a red flag and think, oh, right, I don't want to do this. Are you then procrastinating and it's your fight or flight kicking in, saying, oh, I don't want to buy this because this is too risky, when actually really it's just I don't know, they missed an invoice, or let's say a sales invoice was processed in the wrong month or something like that. So it's not a big deal. It was just an error. but you could say, oh gosh, it's all wrong and I'm not going to buy this business because I've got to the point. Because believe you me, Victor, I remember the day, I can even visualize it as I'm driving there for the first day when I bought this business. It was on I'm pretty sure, 11th of October. I was terrified. Honestly, I don't want to say that to put you off.
No, no,
I'm,
no, no. Yeah, I can
I'm
appreciate.
I'm human, right?
Yeah.
But I'm driving there, flipping out. What have I done? It's like, yeah. So every step of the way, and the reason I'm telling you this is that you will. You've got to the point where you had to go and see someone for the first time. Your first face-to-face meeting with a
Yeah, that's right.
seller. That was, I'll use the word scary. Yeah, it's a new experience. What are we going to ask him? What is he going to ask me? Is he going to think I don't know anything about business? All of these emotions are running through you, and that will happen as you go along. But each time you've got to push that boundary, push those gates open, and walk through it. If you want to own your business, if you want to change your life, and do that. I hope that's all right.
Yeah,
I
yeah,
hope
no,
that's
I
coming across
appreciate
in the
that.
right way. Yeah,
Absolutely. And I think that's why I almost want to have some sort of support.
yeah.
I generally, personally, I think I can kick myself to move, right? Generally, I can
You
get.
couldn't. Sorry, you can.
I think I'm a self starter. I can really get moved.
I think already from the very fact, even though you did that course, it was a free course. The fact that you're writing these 1,000 letters, you're taking action. I can see that. Yeah, definitely. I can see that in you. Yeah,
So, but at the same time, I don't know what I don't know, and I just
yeah,
wanted to have the right person, just like have the right support, or at least have just knowing there's someone I could bounce questions off of and say, right, this is what I'm thinking, this is what I see, what I
mm,
got, especially some more experienced in the space, and
mm,
also the benefit of having an accounting background again.
yeah.
I saw that
Yeah,
that
well, I mean, that is one of the benefits I do have, and whilst it gave me an advantage on the due diligence front when I was buying a business, it does equally give me the benefit that I can impart that knowledge in the first place within the course, but then as support for someone taking that course. So yeah, and one thought I had, actually, I probably can bounce this by you, just thinking about it. I talk about my course is the 5 steps to buy a business. Step 5 being the due diligence, and actually you can take each step as you progress through, really, because there's no point learning due diligence till you get to it, if that makes sense. So that's how I've designed it, because until you get to that point, I'm not saying you're wasting your time. You could do it and then refresh it as you do it, but you might as well do each step as you get to it. But I have considered selling the modules separately. If you bought each one individually, it would be more expensive than the whole. But it might be that people think, well, actually, I already know about seller financing, so I don't need that module. I already know about whatever it is. But all I want to do is buy, let's say, about due diligence. Would something like that be beneficial to you? Have you looked? I don't know if you know all the
I
5
have.
steps.
I have gone through your site. I have looked through the modules. I've looked at the 5 steps. I have.
Okay.
Oh, yeah.
Okay.
And yes, sorry, carry on if I wait.
Well, no, that was the question, really. I don't know whether you've looked at the 5 steps and think, well, actually, of all those 5 steps, I've got enough knowledge from the internet, from researching all the rest of it. And really, the only one I'm interested in is, let's say, due diligence, or it might be due diligence and how to value a business, for example, or whatever. It might be just those 2 modules. But as I'm saying this equally, when you think about it, you don't know what you don't know. So there might be snippets in the other ones that you don't know, but you might think, well, actually, at the moment, all I want to learn is this. So would that be beneficial? Do you think that would be a good idea out of interest?
I think yes, it would be for someone
Okay.
like me, for example. And when I looked through the 5 steps, I could immediately identify that due diligence would be a massive benefit for me.
Okay.
I would really, really benefit from that because even before engaging any accountants, I want to know, I want to have a clue of what they're doing, even if I choose to do that.
Yeah, that's a good point, actually. Yeah.
I knew I wanted that. I knew I wanted the calculator, the AppCalc. Okay, that's something I don't think I've seen anywhere else as well.
Okay.
Knew I wanted that. Then maybe the 50 questions to ask a business.
Yeah.
It's another module, maybe. And in that order, right? Due
Oh,
diligence,
interesting. Okay.
the AppCalc, and the 50 questions. The other ones about seller finance and valuation, I feel not critical for me.
Yeah. Well, interesting enough, to be, I'm probably doing myself an injustice by saying this, but to a large extent, by having the AcquiCalc, that in of itself helps with the valuation of business in any event, doesn't it? So, yeah.
Yeah, the AppCalc for me is really the core of the valuation, right? Because once you can analyze the numbers and you have a sense of
Yeah.
the business,
Yeah.
you can begin to take a point at what kind of multipliers you're willing to pay for it.
Yeah, that's what it boils down to. It really does. You put in all the numbers from the accounts of the business, ideally 3 years, better 5, and then it will throw out a profit figure when you do all the adjustments, and then it's what profit multiple. So you can play with the multiples, you can play with its EBIT, EBITDA, and then you've got an average or a weighted one. So you've got all the different types of valuation. But talk about due diligence. The other good thing about it is that it does throw out. It's got a couple of graphs in there, and it's got the ratios, which kind of is a precursor to the due diligence as well. So, and it may even throw up the red flags when you're actually putting it that you may not see when you're looking at the balance sheets and P&Ls of a company, because certainly I work better with visuals. Yeah, if you had a whole set of numbers in front of you, it's one thing, but if you put it in and then you've got a graph, if it's represented graphically, you can sometimes see trends and figures that you wouldn't necessarily see by just seeing a set of numbers. It's just the way our brains work at the end of the day, isn't it? So it is quite good as a, well, not, I think it's more than quite good. I think it's very good as the precursor to the due diligence. And then if you then add on that the teaching how to due diligence, and if you choose to get someone else to do it, then you can pick up on what they're doing and you'll know what they're doing. And I suppose equally, and I don't know whether this would all work, is there may be elements that you could do of the due diligence to reduce what they do, so it reduces that cost possibly. I'm not quite sure how that would work, but that would be down to, probably you do the actual section of it and then think, oh, actually, I reckon I can do this. It's not actually that difficult. So,
Yeah, I think the only thing to add to that was if you choose to sell them individually, the question will be what kind of support will then be available post sale.
I think the way I hadn't thought about, that's a very good question. I hadn't really thought about it in that much depth. And this has all come about by the move to Shopify, because I think it just makes it a lot easier to do on Shopify. I think the support would be there regardless. So you'd get that whichever of the ones you buy, I think. And equally, I've thought about whether I charge for the support. At the moment, it's free, but whether I charge for it or not. But it wouldn't be a huge amount of money. But no, at the moment, it's free. It comes as part of when you buy the course, to be fair. So, yeah.
And do you, as part of that, do you offer any face-to-face kind of? I know you touched on it that you don't necessarily do.
I don't at the moment. No, I have done a few, a bit like this, really. And I did it largely because it helped me develop the course. So, or look at it in a, or help me improve things, really. So, if someone had a particular challenge, I wanted a face-to-face and also feedback about the course, to be fair. So I have done those, but ordinarily, no, that's not included in the course. So that would potentially be an upsell, and I haven't quite decided how I do that. It could be it done in one of two ways. It could be and I think this would work quite well, and I'd be interested to hear your feedback, Victor, is that you pay a fee for a mentorship over a period, let's say it's 6 to 12 months as an example, and then we would meet, let's say, once a week, once a month, and I would then set you tasks or what have you. So you would say, right, I've seen Fred at XYZ Limited, and this is how it went, and I wasn't sure what to do here. Or it might be, I'm about to meet Fred of XYZ Limited. Could you give me some guidance? It could be that. So a mentorship over a period of time. The other option, which I favour in the first place, would be to say, right, you can pay a fee for an hour of my time or whatever it is, a bit like we're doing here.
Yeah.
And because, let's say you've bought the course, you've done the course, or you've done a section of the course, or whatever you've done, or you bought AquiCalc, and you've got down to a certain track and think, well, actually, I really just want that face-to-face with Russell, rather than send a question and wait for him to reply, because it is, waiting for a reply at the end of the day. But I want that interaction, a proper interaction, and it'll be just a fee for that interaction. And you can say, right, I'll pay a fee, have that interaction, that moves me on to the next step, or it gets me over that hurdle, run questions and answers. And I could do one of both, but at the moment I've chosen not to do that at this stage. But it is something that I potentially could do. So I hope that helps.
Yeah, that helps. That's good to know. I think for me at the moment, I've seen various other mentorship models out there. Quite a few of them are skewed more towards pay a fee for a period of time, 6 months.
Yeah.
And that's it. I've seen a couple of them say, "Oh, we'll help you buy a business within this 1 year period.
Yeah.
And by the way, if you don't buy, we'll let you stick around."
Okay.
Which is fine. Personally, I think I will go for the latter, which is I'm executing, I run into problem, and I just need it's a bit of a naughty problem. It's not one you can just fire an email and get a response back. I might want to get some face-to-face time and just talk it out, because sometimes in talking to someone, it just begins to make sense. So personally, I will favor the pay for some of your time, have a face-to-face interaction, and sort of get your feedback and bounce back about ways to go through that thing out, because you start on the journey. You don't know if you're going to buy the business in 6 months, in 1 year, in two.
That's exactly right. And as you were saying that, I was actually thinking, be interested to see what you said, but I was thinking the latter, the pay for a session, makes more sense, because I've been on courses before. I did some property courses with my wife, actually, and then you pay for a mentorship afterwards, which is what I did. But then you kind of feel this time pressure that you've got to try and do this within a particular time frame, and you've paid a lot of money out front, and then when it comes to an end, and then all of a sudden you get a deal come up or something come up, you think, oh god, it's come to an end, what do I do now? So I've been in those shoes, so I know what it's like. So yeah, it's one of those things. So actually I appreciate that feedback, thank you.
One last question there. It's do you have any sort of professionals you recommend and think? Because for example, when I started, while I'm looking for the businesses, I started talking to accountants. I've got an accountant that looks after I've spoken to 2 different accountants, and how do you know who's going to be good at doing due diligence on a business?
Yeah.
Everyone's going to say, yeah, I can do it, definitely.
Yeah.
How do you know? So again, that's my next question. Legals, accounts. I mean, you're an accountant. I don't know if you're for that service, or do you have any professionals you work with that you could recommend, who obviously have some expertise in this?
I do have contacts with a couple of accounting firms. They're down this way. One is literally down the road in Ringwood. He's more of a forensic type of accountant, so he tends to deal with divorce. Funny enough, he tends to deal with the businesses at the other end, where there's a couple going through a divorce or there's a death, and he has to value the business for that purpose. So he knows a lot about business valuation. Whether he will do due diligence, I don't know. Actually, he's a friend of mine. There's another firm that I do know locally, which I could recommend, and I've used him for audit side of things and a bit of tax, but I don't know how much they do of due diligence. They're auditors, so if a firm does auditing, then they will do due diligence, because auditing and due diligence are pretty much the same thing. It's a different different reason for doing it, but it's essentially the same process, really. You're just checking that the balance sheet is correct and the income isn't. Normally, the audit is to make sure the income's not understated on an audit, but probably the difference with due diligence is that, making sure the income isn't overstated and the profits, the costs aren't understated, because if they're selling the business, what do we want to do is make sure the profit is as high as possible. Normally with an audit, it's oftentimes the other way around, because they're trying to reduce it to pay less tax, so the profits are minimized. So it's just turning it on its head, really. But the process is the same, but you're approaching it in a slightly different way, if that makes sense. So but it probably make more sense that you would engage with a firm locally to you, I would, or certainly within the radius of where the businesses are that you're looking, I would argue. And I don't know any firms in Reading, I have to be honest, so I think the way I would approach it is to obviously have a look at some of the reviews, do face-to-face meetings, that probably sounds better, and maybe see if you can speak to some of their clients on a confidential basis to see what, bear in mind, I did have an accounting practice, and if someone said to me, could I speak to one or two of your clients about your services, I'd have said absolutely yes. I had a very good reputation when I had my accounting firm, and I was more than happy with that. And when I had my business that I bought, I had all sorts of different things. Customers say, well, could I speak to one of your customers? Absolutely yes. Could I go and have a look at their furniture? Well, yeah, but you've got to speak to the customer to see if they're happy to.
Going to the wardrobe, yeah.
Yeah. Can I have a look at their wardrobes? Well, I think you better speak to the customer about that. I can't say yes. I'm happy to speak to them, but whether they'll allow you into their bedroom is another matter. Can I come and have a look around your factory? Absolutely yes. Where the furniture's made. I had all those questions. So I think if someone says no to me, well, hang on, is that a red flag? So I was always open, because you've got to make it as easy as possible for that customer to buy, and that follows through into when you buy your business. I don't want to teach you to suck eggs here, but at the end of the day, the easier you make it for your customers to buy, the better. And I think if you want to build a relationship with an accounting firm, if they make that process easy for you, then, by asking those questions, if they start putting blocks in the way, is that someone that you'd really want to work with? Possibly not. So I think that might help you to try and find someone. Don't go with the first one. Have a look at two. I recommend maybe three people, and you've got to. It's a rapport. You've got to trust that person and go with your gut, really, which is sometimes previously I've never been particularly good at, to be fair. Something's telling you something's off, but you may still do it. But go with your gut of, can I work with this person? And I think that worked both ways. So certainly when I was in front of customers, when I had my accounting firm, people would go with me because they had that rapport, and that actually leads me on to, because when I sold my accounting firm, because I've been on both sides of this coin, which I think is beneficial actually. I sold my accounting firm on seller financing, as it happens, which was my light bulb moment. I think, well, hang on a minute, I've sold my business this way. Will people sell a business to me in the same way? Because seller financing back when I was buying, it wasn't so prolific on YouTube. There weren't all these people on YouTube. That was my light bulb moment. But when I was selling my business, the guy that I sold it to, there was that rapport. And that's so important, Victor. So really take that away when you're buying a business, is really focus on it. And I do try and put that across in my videos on YouTube about rapport and how important that is. And it's asking those open-ended questions, because that builds that trust. Because someone's not going to sell a business to you. Well, they may not even sell a business to you if they don't trust you, but they're never going to lend you the money to buy the business if they don't trust you. Because would you lend some money to someone you don't trust?
No, not at all.
Absolutely not. So I think that in of itself is important. But equally, when I was having those conversations with that person, he was an accountant. But because I built up that trust and I liked him, had I been the relationship was different, that I was looking for an accountant, I would have gone for him. So I think that might help you when you're thinking about working with somebody, to make sure you've got that rapport as well. They've got to be able to do the job, of course.
Yeah, definitely. Yeah.
But that might, does that help?
Yeah, it absolutely helps. So the only question I was going to ask is, and I'm not deterred by this because I'm already facing that, is in that situation, isn't it made easier that they are already also an accounting professional? How 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 difficult or easy would it have been if they had no clue about accounting at all?
If they're not an accountant, you
They
mean?
weren't an accountant.
Well, there's two ways of gaining knowledge and experience in doing something. Okay, let's use me as the example here, Victor. Now, as it happens, I'm a chartered accountant, chartered tax advisor. Okay. But if I was just a chartered accountant, chartered tax advisor, that doesn't make me necessarily good at either due diligence or auditing. What makes me good at due diligence or auditing is having done it, is the experience of doing it. Okay. So to answer that question, if this person isn't a chartered accountant, but they've done due diligence on lots of companies and they've built up their experience and knowledge by doing, then yes, absolutely, that would be fine. Have you got someone in mind with that? Is that the reason for the question?
I know you've. So interestingly, over the weekend, I was in London to look at the business that manufactures fitted furniture.
Seriously? Okay.
Reached out to me the previous week, and we arranged a meeting. And usually, the way I go about approaching businesses is first thing for the first phone call, I ask for some accounts, so I can have some quick overview review to see if is what going further with any further conversations. But this particular business owner said, "Oh no, that I should forget about the papers. I should come down and see the factory. Let's have a face-to-face conversation." I weighed it up and I thought, that's all right. I go into London every other day. I can do that. So I went in and saw his factory, and he was showing me all the new equipment he's bought, and he's built up a fantastic business. Although a lot of it's still dependent on him, but he's got more than 30 staff.
Okay.
He's built up a decent profile, making good revenue and good profits. Although a lot of it's transacted cash, which, but
Still a lot of cash, really. Interesting.
quite some of it is cash transactions.
Right, okay.
Yeah, the business hasn't got finesse, but you can see that the business has got value.
Yeah.
How to put it? It's not the most. It's not the business hasn't got the finesse of having a proper business structure and all that. But you can see he's built it over more than 10 years, and he's managed.
Okay.
And none of the equipment is leveraged, etc., etc. But I mean, the first question they asked me, what do you know about fitted furniture? And I said, I don't know anything about it.
Yeah, well, I didn't. When I bought my business, I knew nothing. Yes.
I didn't know anything about it. However, what I do know is that the fundamentals of a business is the same across sectors, and
Yeah.
that's what I bring to bear. You might have the ins and outs of how to make furniture and how the machines work. That's not my expertise. My expertise is how the business works. So I did my best to try and build that rapport and position myself as as a business buyer, not necessarily a carpenter or a joiner, right?
Yes.
Understands all that. but I guess it's just a question because I felt, I don't know what the result of that is or how he took that per se. I mean, we did spend more than 2 3 hours really going through, and he was really looking to pick my brain to really understand, you know, how do you run a business from a business point of view without being in it, every other day. And
Right. So sorry, Victor, when you asked the question, I think I misunderstood the question. I thought when you were asking it, you were asking about finding an accountant. You were asking your question was, how do you deal with when you're buying a business when they say, do you know anything about that business? Is that the question? Sorry.
so the first question I asked was about finding professionals like accountants who do,
Yes.
or legal advisors who can advise
Yeah.
share purchase or anything like that. Because I didn't know if you had people you worked with.
Yes.
So that was my first question.
Mm.
And then I went on a tangent when you talked about building rapport, that the importance of having rapport with whoever is selling the business.
Yes.
Based on the example you gave where you sold the accountancy and the person you sold
Oh, yes.
an accountant, I thought, could that be an easier case because they were first and also an accountant, which means they must understand something about accounting.
Yes. Okay.
Your confidence in trusting them with your business versus if they had absolutely no clue about accounting. And even though you had a good rapport with them, would you still have the confidence to sell them your accounting business?
Yes.
So that's
That's the question. So sorry, I misunderstood your question. I apologize for that, but it's a very good question. And from all the businesses I saw, I was never asked that question, interestingly. Yeah. Now you've been asked the question. Now I don't know whether it's because I asked lots of questions and I've got the 50 odd questionnaire. So I think because I approached it, it was all about them, all about their business. Whether at the end of it they thought, well, crikey, this guy knows a lot about business and knows a lot about what questions to ask. They never thought of asking that question. I actually don't know whether that is or isn't. But to answer on the spot what you're asking me about, is it about how you answer that question?
no, it's more. I was trying to pick your brain from a seller's point of view.
Yes.
We have felt less confident selling
Oh, it's right. Okay.
if they weren't an accountant like you were.
I think maybe accounting is possibly the wrong example. It goes back to the what we started off with, an accounting firm or an insurance broker. They are a very specific industry. They need a little bit more professional kind of understanding. Having said that, I think for me, the number one is rapport. And do I trust? Well, rapport and trust, they kind of go hand in hand, don't they? So if you build rapport with someone, you're kind of building trust, right? So I would put number one, that rapport, okay? Secondly, do I think this person can make my business work? Because I had a vested interest in my staff that I was selling and my clients, because I had some friends and all the rest of it. I want to make sure they're going to be looked after. And I think my number one is because I've built the rapport, I trust this person. I think that they're going to look after my staff. In fact, young guy, I was so pleased about this. I sold my business. This guy, young chap, within a very short space of time, he was made up to partner. That was awesome. That would meant more to me than selling the business, honestly. And that's the sort of feeling from a seller's point of view of how important the employees are, right? So I know what that emotion is like selling a business. Now, if he had said, look, I'm not a qualified accountant, but in his case, he was buying it to add to his existing accounting business. But let's say he wasn't doing that. Because you can run a business with its employees, which is what I had, I don't think it would have bothered me because feel that he would look after the employees, he would look after the clients because of the type of person he was. It's not about his qualifications or what he can do. It's about how he goes about things and who he is as a person. I think that's probably for me the key. That's not to say everyone would think that way, and I think probably the way you answer the question was a good way to answer it, and it would be up to the business owner. And I think if at that point you've already built a reasonable amount of rapport that he trusts you and thinks actually this guy knows what he's doing. But do you know what I did, which might help you in that scenario? When I bought my business, I, like you, I knew nothing about fitted furniture. The first thing I did was I went out selling furniture.
I went out with the team.
No, I went out on my own.
Oh, interesting. Okay.
Yeah. I had to learn how everything was put together. I had to learn, these sliding doors did this and hinge doors did that, and how to measure it, how it all fitted together, because you need to know all of that to be able to sell it, right?
That's right.
So I started selling, and I'll come on to a story in a minute about that, okay? Because it was quite cool, actually. I then worked in the factory, building the furniture, because you can't beat experience of learning how to put something together, because then when someone comes to me and says, oh, this can't work or that can't work, well, I've made it, so I know it can. What are you talking about, type of thing? And I went out with the fitters. I didn't actually do fitting, but I went out with the fitters to see how they fitted, how they scribed it, and all that sort of stuff. So I got stuck in. So you kind of, if, for example, someone asks you that question, let's say it's a different type of business, say, well, what the hell do you know about making widgets? And say, well, actually, my intention is to do X, Y, and Z, one of which I'll become, a factory worker for the day or a couple of days to understand how it works, because that works on two sides of that fence. A, it makes you understand the business a whole lot more, but equally it helps you understand the employees and what they're going through and their challenges. It's a bit like when you watch Secret Millionaire. Have you ever watched that?
Yes, I did.
Undercover, yeah. Undercover. Sorry?
I think it's called Undercover Boss.
Undercover Boss, that's it, yes. The undercover boss, when they go undercover, they learn so much more about the business, about the interaction of the employees and who they are and all that sort of thing. And I think you equally, when you're working in the factory or what have you, so I think that's quite a nice way of putting it and saying, well, crikey, if this guy's prepared to do that, he cares about the people, because if you put it across in the right way. So I think these kind of things will help to build that rapport and build that trust. So, but coming back to the sales thing, I can't remember how long I was there for, but it had a couple of sales guys, and then I'd taken on, in fact, a couple of the fitters came across, because I changed the commission structure, and they thought I wanted a bit of that, and they were fitters, and they made the perfect salesperson because they knew how to fit it, so they knew how to sell it. It was brilliant. It was a genius move by me, even though I say it myself. But I then took on this other designer sales guy, and he went out to see this guy down in Poole, and this guy, I think, would have been in the industry selling for about 20 years. Right. Now, I'd only been selling furniture for, let's say, 6 months. Might have been shorter, actually. And he said to the guy, I don't want you to design my furniture. I don't feel confident in you. I want the boss. So a phone call comes through to me from the person in reception saying, I'll call him Fred, for a descriptor, for a name. Fred would like you, as the boss, to go out and design his furniture. He wants furniture in, I think it was 5 rooms. So, of course, now I'm thinking, this is like pushing my comfort zone, right? So I turn up at this guy's place, and he's so Mr. Perfect. He wants the top notch. He wants it in every frigging room. So he wanted his living room done out with all this furniture. He wanted fitted wardrobes in all his bedrooms. And this is what made me think about it as well. He said to me, "Oh, so how long have you been designing furniture?" Now, I kind of answered it a slightly different way, and he accepted the answer. And this is about presenting yourself in a different way, which is why one of the reasons why I say about going through your CV.
Mm.
Prepare a CV. I know you've seen that video, that advice. Prepare a CV. But anyway, so what I said is I said to him this. Well, I've been designing and drawing for a long, long time. I loved art at school and I did art A level and I've painted and stuff like that. So I've always been into creativity and design. So it's in my blood type of thing. It was kind of sidestepped the question a little bit, but it was a genuine answer because I did do art A level and I do paint and
Yeah.
I am a very creative person. So can you see how you can kind of shift the question to suit the answer? You're not lying. I'd never lie to anybody. That's just not the right thing. Because why would you? Yeah, because you're trying to build trust and rapport. If you start lying to someone, that's just a no, right? So, but he was happy with that. Do you know what it resulted in? It resulted in the biggest sale the business has ever had. You remember it, £64,000.
Single
The
order.
average transaction value of that business when I bought it was £1,800. I increased that to, I think it was about £3,000, but this was £64,000. And I'd only been designing furniture for, let's say, 3 to 6 months. It was less than 6 months. I can't remember how far it was in. And I absolutely was bricking it when I went to it. But, well, this guy's been doing it for 20 years. I've been doing it for 5 minutes. What the hell do I know? And I got the deal. And he was absolutely ecstatic with his furniture when it all fitted. It all worked. And I'm having to do it on the hoof. Oh, right, I want this. And I think, well, I've never designed one of those before. How does this work? So if I can do that, you can have a conversation with the business owner.
I must say, and that's a beautiful answer there. I must say that the two businesses have had face-to-face conversations so far. They were by no means put off at all. We've gone on to have very good conversations, and with one of them, um, they've come back to me saying they want to speak with the accountant to
Okay.
discuss
Their accountant.
their accountant
Yeah.
business, and they'll come back to me. So the conversation is ongoing, and
Okay. Have you, in both those cases, have you asked them, because I presume these are people that you've written to, so they're not on the market. Have you asked them or got a feeling for how much they want for their businesses? Do they know, or is that where he wants to speak to the accountant and say, how much is my business worth? Is that where that conversation is going?
so like the first one, I wrote them, and then they responded to my letter. So I didn't find them on the market. But one of the questions I asked them on the day we met was, "Is the business on the market?" And the answer was yes. And they were quite frank with me that it's been on the market for about 2 years now. And
Right.
frankly, they've not been getting much traction. And so I asked them what the valuation was,
Yeah.
what was it valued at, and they said 1.2 million or 1.5 million. I think it was 1.5. And I looked at the business and I said, do you think that that's what it's worth?
Yeah. Yeah. I mean, the other question I would say, do you agree with that evaluation? Yeah.
So I said, yeah, do you think? I mean, they were like, I mean, they don't know. They're not business sellers. Didn't quite answer the question, but yes, they already had a valuation, and then I looked at the balance sheet and I pointed out to them, you are a partnership and you both work in the business. That means this profit hasn't taken into consideration your salary. I
Yeah.
would pay you when we buy this business, and they would need to be paid. So immediately, the profitability of the business drops by about 100 grand.
Right.
And based on that, the valuation you have versus the profit you're making just quite doesn't add up.
Just out of interest, what sort of multiple did that work out at in the end, roughly?
So we left the conversation. I didn't want to give them a figure or say the
Yeah.
figure First, I wanted to tease that out from them to let them come forward with a figure, but I wanted to just guide them to show them without saying it that the valuation they had was a little bit inflated.
Yeah, but if you looked at the actual profits and the 1.2 million, what sort of multiple does that work out roughly?
About six
I
multiples.
thought that's what you were going to say, six. I thought this is going to be around about six multiple. And what sort of turnover?
The turnover is about shy of 4 million.
Okay, so it's a nice big business then. Yeah.
But remember, it's retail, so a lot of it
Ah, right. Okay.
of stock
Yeah.
and sell. So it's the margins that is the
The
profit.
margins are quite tight, are they?
Margins can be tied.
Yeah.
So
Yeah.
it's
Just be a bit careful with retail. Obviously, but it's not to say you can't or shouldn't buy it, but just be careful because retail is, yeah, you only need another COVID or another war to break out. There's yet another flipping war broken out in the Middle East or what have you, and or people in hardship and so on. So yeah, you just got to be a bit careful with retail, with any business at the end of the day. But yeah, okay.
so we didn't come to any figures at all.
Okay.
And basically, and that conversation of like, I'm not going to press you to make a decision or come up with a number. You can go away and have a think about it. But this
Yeah.
is you
Yeah.
a view that the profit on the paper versus what I see as profit as a buyer is very different.
Yeah. There's always that difference, and what I always found is that sellers, equally business brokers, they sell the future. This business is doing this, but you can do X, Y, and Z. It'd be great, and it's fantastic, and there's bells and whistles and fairies in the garden, all this sort of thing. Well, I always just say, well, why haven't you done that? All these bells and whistles, it can make all this much more money. They always sell the future, right? As a buyer, you're buying the past. You're buying what has happened, has happened. But in your mind, as you're buying it, you think, well, actually, I know I can do this, this, and this for the business. But you don't want to be paying the old owner for what you can do to that business. You're paying for what it's doing now. There's nothing wrong in doing, paying some sort of success fee. If, for example, I don't know, they've been working on some sort of earn out. If, for example, I don't know, they've been working on a deal for a long time. If that comes to fruition post sale, you can pay them something towards it. But if it doesn't happen, you don't pay them. There's all those sort of things that you can build into it. But that's always the difference. And at the end of the day, it comes back to the original thing. You can work out a value. Let's say you value that at, just for argument's sake, £300,000, and they're at 1.2 million. It's a willing buyer and a willing seller. Can they meet somewhere that works out? But the crux of that purchase is, can the business afford to pay the purchase price? Because it's the business that's got to pay for it. It's not your personal. You may have to put up some sort of deposit, depending on how you can work the deal. But can the business afford it? Now, of course, there's the purchase price, which you agree upon, and you must have a portion of that as seller financing. I'll come back to why. You may already know why, but so let's just say you agree an amount. And affordability is agreeing that amount, and then it's over what period. So if, for example, you wanted to pay 300, but they wanted 400, you think, okay, I could stretch that. But the only way the business can afford that, instead of paying it over 3 years, it has to be 5 years or 6 years or 7 years, whatever it is, because there's no point agreeing to a deal that doesn't work. You're setting yourself up to fail in the first place. Coming back to why seller finance is so important, is you're holding the cards to a degree. So you've sold that business, you're holding a portion back, and there could be something that gets missed in due diligence. There could be something that comes out from the later down the track, a tax liability.
Yeah. Yes, sir.
There's a POA investigation. They find out that they haven't paid something, or they haven't disclosed something on P11D or whatever. All that sort of thing. By having something held back, i.e. seller financing, it's far easier to deduct that than to have to say pay 100% to the owner. They've disappeared off to Timbuktu, and you're trying to get that money back.
Trying to get some money back at that point.
Yes, I much prefer to have it in my bank or in the business bank account and say, look, this has come out. It's a 10 grand liability, whatever it is. I'm going to deduct that off the next payment. But it must be obviously written into the sale purchase agreement that you can do that. You don't want to be contravening the agreement. As long as the agreement says that should something come up and it falls into these categories, it's a tax liability that hadn't been thought of or what have you. These things come up. The business I bought, okay,
Yeah.
and I'm not even sure I would have picked it up in due diligence per se, because it started to become a bit more of a problem. I'm sure the owner knew about this. There's something called delamination. So with fitted furniture, the furniture itself, the main part, whether it's a kitchen, after this call, go into your kitchen, open one of the doors, the unit behind the doors in your kitchen will be made of chipboard, but it's coated on the outside and it's edged on the edge. The business has something called an edger, which is a machine. So you know what chipboard is, right? The good chipboard is 18 mil and it gets edged on the outside. I know all this because I had a fitted furniture business before. I didn't know. Okay, the door can be made of various different things. One of which is wrapped MDF. So it's MDF, which is something slightly different to chipboard. It's more solid. It's like a solid. It's effectively wood, but it's like particular sort of squashed. Compacted, yeah, that's a good word. But it's wrapped in vinyl, and the vinyl is glued to the packed wood. And what was happening was there was a batch of glue and or vinyl where that delaminated, so it was coming off. And it turned out that customers are coming back to us saying, "Our furniture's delaminated. What are you going to do about it?" and all the rest of it. Now, as it happened, when I bought the business, I had a 12-month warranty, and these were outside of the warranty. But actually, one of the things I did do, I increased that warranty to 10 years. There's an interesting story behind that if you want to hear it. But and people were saying, "Well, you've got a 10-year warranty." I said, "Yeah, but that's only come in now. When you bought it was only 12 months." But what I decided to do for goodwill, I replaced it. I honoured it because I felt I've been in a situation where I bought a car a few years back, brand new car, and the gearbox went, I think it was after a couple of years, and they tried to tell me it was wear and tear. I said, no, I'm not having that. A gearbox, shouldn't last just 2 years. A gearbox should last the lifetime of a vehicle, let's say maybe up to 100,000 miles. It was not fit for purpose. They relented and they agree with me. It's that type of thing. It's the customer isn't always right, but it's that kind of argument really. And I like to put myself in someone else's shoes, and I thought, well, what's this going to cost me? Not a huge amount of money. It cost me the cost of replacing those doors. The value to them was a lot more, and my profitability could swallow that, and the goodwill was worth it, because some of these customers come back and say, well, actually, I was thinking about changing it really. As you've been so good, would you come and get a quote? So I got business out of it, and it made me feel good. It sits comfortably with me. I like to sleep at night. I like to be the good person. You can never do wrong by doing the right thing. It's one of my mottos. I say, my wife says, you always say, you can never do wrong by doing the right thing. It's the right thing to do. We ought to really call it a day, because it was supposed to be an hour, but we're an hour and a half. But it's fine. I've enjoyed the conversation, Victor. As I said, I enjoy this. I enjoy helping people at the end of the day. A tip: secret shopping, brilliant. I did a secret shop on a competitor. I'm not going to mention their name in this, because a bit like you don't want to mention the name of the other course. I don't think it's right to do that. And during that secret shop, they slated us. They said, they use inferior products, and that shows because they only offer a 12-month guarantee. we offer a 10-year guarantee, blah, blah, blah. Their internals are inferior, blah, blah, blah. Well, we get them from the same factory. 18 mil is the size of the chipboard. They were using 18 mil. So they were just trying to get the deal by dissing the competition. There's two lessons in that. One is never diss the competition. Talk about yourself. Sell yourself. That's an important bit. Forgive me if I'm teaching suck eggs here. I'm not. It's just experience really. But the gold I got out of that was I thought, right, okay, well, let's put the money where my mouth is. And I just immediately increased our guarantee to 10 years. So they could no longer say that. Why would I guarantee it for 10 years if we were using inferior products? Because we weren't.
Yeah.
But I put my money where my mouth is. So secret shopping is a brilliant tool for finding out what the competition is doing, finding out what the competition is saying about you. I didn't actually think of it from that point of view, but it was great, So yeah.
With that, fantastic. All right. Yeah.
Any final questions or thoughts, Victor? Before
This is good. I was going to ask, have you had to manage different businesses that are not necessarily in the same sector, but you bought them and owned them, and had to?
Yeah.
In this case, you own this one. It seems you were to some extent invested in it and spent some time in it. What if you had 4 or 5 different businesses that were not necessarily doing the same thing, or even had particular signage?
Yeah, I've never been in a situation where I had multiple big businesses at the same time. It could be done. Look at Richard Branson. He's the example where you can have lots of businesses as long as you've got good management in them. But I have had different types of businesses. In fact, the business actually, no, that's not quite right, because when I bought my fitted furniture business, I still owned a care business. So that answers 2 questions. One, have I been in different sectors? Yes, absolutely, care business. But that one was slightly different. They were a client of my accounting firm, and he was going through difficulties. His partner died, and he didn't want to run it on his own. And he approached myself and his brother and said, I'll give you half the business. If you pay for half the business, I'll give you a third each.
Okay.
Because the shares, when his partner died, had been handed to his daughter. He didn't get on with the daughter. And he didn't have the money to buy them back. So he said, if you pay the money to the daughter of what they want, I'll give you a third, rather than you just getting a quarter of the business. So that's how I invested that. But I said, well, if I do that, I want to become MD/FD of the business. I want to grow it. It was very touch and go. It was kind of on the cusp of losing money, breaking even, about to go bust, and had the staff walk out when this all happened. And I helped them grow it to over £1 million. And so I've had experience of that business. And then I went into fitted furniture. So it's, and I've had accounting practice. So I've had different sectors. And I was running or part of the 2 businesses when I first bought the fitted furniture business. So the fitted furniture business was down here in Bournemouth.
Yeah.
And the care business was up in Cambridge. So actually I had 2 businesses which were, well, subject to the M25. And I don't need to say any more than that.
Yeah.
Could be a 2.5, 3-hour journey or a 6-hour journey, subject to the M25. Yeah.
Traffic. Yeah.
So it can be done, but I think what you need to do is get the first business under your belt, make sure the management's in place, and it may already be in the business, and that's what I did. I brought people up within the business that knew about it, or you bring in outside expertise. And funny enough, when I was looking at the civil engineering business, I knew nothing about civil engineering. The closest I got, my dad used to work for a civil engineering business, but that's the closest I got to it. Or I love diggers and seeing them on the road. That's as close as I got to civil engineering. But what I did was, I have a scuba diver, and in my dive club there was a guy who worked for one of the very big civil engineering businesses, public company. And I talked to him. I said, look, I'm looking at the civil engineering business. I know nothing about it. Have you thought of, would you invest, and would you want to run it for me? And he said, absolutely, yes. He said, I'm not particularly enamored with my existing situation. So and that was the other portion. So that one used every single type of way of financing it. I had an outside investor effectively, So he was going to put up 50 grand. And I was going to give him 10% of the business, and he was going to become the MD and director to run that business and help me grow it, because he knew, from running a PLC to running this, and that was exciting for him. He was going to have skin in the game. So that effectively gave me the deposit, and then I had as I said, the invoice financing, the asset financing, and seller financing. So it was like kind of the perfect deal, perfect business, and it didn't happen. I wanted to cry when that happened, but these things happen. So yes, it can be done, but get that first business under your belt, get it working, get good management in place, maybe even working it yourself, work in the different departments like the undercover millionaire. Was that what we said it was?
Yeah, that's the undercover boss.
Undercover boss, sorry, yes. That would be my advice. And then go from there. And if you decide to then bolt on to that business to expand that business, that's one way of going forward. I mean, you could just grow that organically, which is what I did. You can grow it organically and bolt on things. So if, for example, you've got a supplier that is a big supplier, you could go to them and say, are you for sale? And then buy that and bolt that in to grow it that way, to then get a bigger multiple when you sell it. Or you can think, right, that one's running nicely. Well, there's kitchen, that would fit under the kitchen making business, or kitchen fitting business would probably fit within if you went down the fitted furniture route, I suppose. But you know what I mean? I think you could look at other businesses, but walk before you run, definitely.
No, absolutely. I wasn't trying to. I'm just
trying. I appreciate that. Yeah, no, that's cool.
Trying to get one first, and
yeah.
Right, thank you so much. And that you mentioned the courses moving from one website to the other, but is the link still the same? The address is still.
It's all done. Yeah, the address hasn't changed. It for all intents and purposes, you probably wouldn't necessarily know. It's probably got a different feel, a different look to it, but no, it's still the same domain, bowraven.com. It's a lot faster.
Right.
And it's a much nicer interface, I have to say. So, but yeah, so all the same. So yeah.
Fantastic. Thank you so much for your time. Thank you.
You're welcome. And hopefully this has been a benefit. I hope you've enjoyed it.
Yes, absolutely.
It's been a pleasure. It's been a pleasure talking to you, Victor. I've enjoyed it. So to wrap up, what I'll do is it's a flipping long video now to edit. I'm not going to do a lot of editing, because I think it probably better raw as it is, really, I think, for people to appreciate it, because there's been a lot of questions, and obviously I've given a lot of input just off the hoof that other people could benefit, and that's why I think it's such a good idea. But one of the edits I'll blur your face. As nice, you've got a lovely smile. It's simply a shame to blur it, but I will, to respect your privacy, which I understand. Because I mean, at the end of the day, I guess you're an employee. You don't want people seeing you as well. I hadn't thought about that, really.
Yeah, well, not really. It's just that I'm not really on the.
Not a keen fan of being out in the public. No, that's fair enough. I get that.
Yeah, not really. Not at the moment. And nothing in particular. It's just.
I respect that. That's fine. Don't worry. Good. Well, have a wonderful rest of the evening, and good luck. Let me know, and if you go ahead, and that'd be great. But let me know how you get on, and go from there.
Thank you so much, Russell. Thank you.
That's right. Been a pleasure. Take care.
Take care. Have a good evening.
And you. Cheers, Victor. Bye-bye.